Starting tomorrow, sports betting will be legal in Arizona.
So what do people need to know about reporting their winnings to the IRS or their losses? Fox 10 Stephanie Olmos spoke to a Valley accountant. She joins us live with more. It cuts both ways. You can write both off. Well, and you got to pay more if you win, obviously.
Exactly right. Listen, there's a lot of excitement surrounding sports betting, but a lot of people may not be thinking about how it could affect their taxes. Well, I spoke to a certified public accountant. He tells me people need to make sure they know what they're doing to avoid getting in trouble with the IRS.
Tomorrow we have all kinds of betting that opens up in Arizona.
With sports betting becoming legalized tomorrow, it's important to think about tax implications. Certified public accountant Robert Hockensmith says the type of game and the amount of winnings will determine whether the casino or other gaming organizations must prepare a tax form.
The most people don't realize that you're going to have to keep receipts and you're going to have to fill out a form W-4 so that they can give you a W-2G at the end of the year. And they literally take taxes out right there on the spot when they pay you.
For sports betting, a W-2G form is required if you have over $600 of winnings or 300 times the amount of money you put in. Robert says if your winning doesn't add up to the requisite minimum, you won't get the form and would have to report it on an honor system. But if your winnings don't get reported to the IRS,
the gambling organization will give the information to the IRS. If you don't report it, of course, you're subject to fraudulent tax returns and all the bad stuff that goes along with that. We don't want to do that.
Robert says what he wants people to remember is to keep their receipts. For example, receipts from the ATM.
I've had people who have won the lottery or have won big tickets, in slot machines and poker and so forth, and they win it in December, and they've thrown away their receipts all year long when they didn't win. So now they have no proof that they spent this money, and the money you have spent is a tax deduction against your winnings.
So basically, you can write off your losses, but you need to keep those receipts. Another thing you want to keep in mind, a state income tax will not be taken out of your winnings. However, a federal income tax withheld from your winnings is a flat 24%. Reporting live tonight, I'm Stephanie Olmos, Fox 10 News.